हेलो एवरीवन, हमने अब तक फिक्स्ड इनकम में बॉन्ड वैल्यूएशन, यील्ड कैलकुलेशन, वाईटीएम कैलकुलेशन एंड कॉन्सेप्ट ऑफ फुल प्राइस एंड फ्लैट प्राइस, दैट इज डर्टी प्राइस एंड क्लीन प्राइस कर लिया। डे कन्वेंशंस भी बात की हमने, 30/360 एंड एक्चुअल बाय एक्चुअल। सो आफ्टर डूइंग दिस, अब हमें यह समझना होगा कि बॉन्ड प्राइस बॉन्ड के अलग अलग फीचर्स के साथ किस तरीके से रिलेट करती है। पॉजिटिवली रिलेटेड है, डायरेक्टली प्रोपोर्शनल है, या इनवर्सली रिलेटेड है, मींस एक वैल्यू इंक्रीज हो रहा है तो दूसरा वैल्यू डिक्रीज हो रहा है। किस तरीके का ये रिलेशनशिप है। सो लेट्स एनालाइज दीज रिलेशनशिप। बहुत इंपॉर्टेंट है हमारे एग्जाम के पॉइंट ऑफ व्यू से भी, एमसीक्यू में बहुत सारे इस तरीके के क्वेश्चन बन सकते हैं। सो लेट्स गो फॉर बॉन्ड प्राइसिंग एंड रिलेशनशिप ऑफ बॉन्ड प्राइसिंग विथ द फीचर्स ऑफ बॉन्ड, डिफरेंट फीचर्स ऑफ बॉन्ड। सो देखें, सबसे पहला रिलेशनशिप है बॉन्ड प्राइस का रिक्वायर्ड यील्ड के साथ में ही क्या रिलेशनशिप है। बॉन्ड प्राइस का रिक्वायर्ड यील्ड के साथ में क्या रिलेशनशिप हो सकता है। सोचें, क्या वो पॉजिटिवली रिलेटेड है या नेगेटिवली रिलेटेड। व्हेन आई से पॉजिटिवली रिलेटेड, दैट मींस अगर यील्ड प्राइस इंक्रीज होगी, डिजायर्ड यील्ड इंक्रीज होगी। डिजायर्ड यील्ड इंडिपेंडेंट वेरिएबल है एंड बॉन्ड प्राइस उससे डिराइव होती है, इसीलिए डिपेंडेंट वेरिएबल है। सो अगर इंडिपेंडेंट वेरिएबल इंक्रीज होता है तो क्या बॉन्ड प्राइस इंक्रीज होती है, या रिवर्स है कि यील्ड इंक्रीज हो रहा है और बॉन्ड प्राइस डिक्रीज हो रही है। लेट्स एनालाइज द इक्वेशन ऑफ बॉन्ड प्राइस। तो अगर हम बॉन्ड प्राइस की इक्वेशन की बात करें, बॉन्ड प्राइस की इक्वेशन की अगर हम बात करें तो बॉन्ड प्राइस की इक्वेशन हमारी किस तरीके की रहती है। बॉन्ड प्राइस की इक्वेशन हमारी है B0 इज इक्वल्स टू, और प्रेजेंट वैल्यू बॉन्ड प्राइस है T0, दैट इज प्रेजेंट वैल्यू इज इक्वल्स टू PMT अपॉन 1 प्लस R टू द पावर 1 एंड PMT अपॉन 1 प्लस R टू द पावर 2 एंड सो ऑन टिल PMT प्लस FV 1 plus R to the power n, and this R is our desired yield, investors desired yield, and this is the price. Now from the equation it is very clear that desired yield हमारे डिनोमिनेटर में है, जो हमारा फॉर्मूला है उसके डिनोमिनेटर में है। सो अगर आपने डिनोमिनेटर की वैल्यू इंक्रीज की तो ऑटोमेटिकली जब भी डिजायर्ड यील्ड इंक्रीज होगा, जब डिजायर्ड यील्ड इंक्रीज होगा, प्रेजेंट वैल्यू ऑफ कैश इनफ्लोज will go down and ultimately bond price will also, which is sum of all the present values, will also go down. And if desired yield goes down, the present value will go up and bond price will go up. So it means desired yield और bond price के बीच में क्या relationship हुआ, at any point of time it will be always inverse और negative relationship होगा, एक के बढ़ने से दूसरा गिरेगा and vice versa. Next, let's analyze the second variable. Second variable is coupon rate and changes in bond price. सो अब हम क्या करेंगे कि अगर कूपन रेट चेंज हो जाता है विथ अ गिवन यील्ड, डिजायर्ड यील्ड, तो अगर दो बॉन्ड को कंपेयर करें, किस बॉन्ड का प्राइस ज्यादा डेविएट करेगा, जिसका हायर कूपन है या जिसका लोअर कूपन है। वैसे हम ये आगे जाके इंटरेस्ट रेट रिस्क को डिफाइन जब करेंगे और वहां ड्यूरेशन का कॉन्सेप्ट समझेंगे, तो वहां ड्यूरेशन के कॉन्सेप्ट में हम देखेंगे, जो कि नेक्स्ट पार्ट है रिस्क एनालिसिस, बॉन्ड्स फिक्स्ड इनकम से रिलेटेड। तो वहां हम देखेंगे जिसका जितना कूपन ज्यादा होगा उसका रिस्क उतना कम होगा, और जिसका जितना कूपन कम होगा उसका रिस्क उतना ही ज्यादा होगा। वापस बोल देता हूं, जिसका कूपन ज्यादा होगा उसका रिस्क कम होगा, और जिसका कूपन कम होगा उसका रिस्क उतना ही ज्यादा होगा, क्योंकि उसका ड्यूरेशन बढ़ जाएगा। सो अगेन इसका मतलब लो कूपन इज गोइंग टू हैव हायर चेंज इन बॉन्ड प्राइसेस, इनवर्स रिलेशनशिप, एंड हाई कूपन विल हैव लो चेंजेस इन बॉन्ड प्राइस। तो अब ये थोड़ा समझते हैं न्यूमेरिकल एग्जाम्पल के साथ में। तो लोएस्ट कूपन में हम एग्जाम्पल उठा लेते हैं जीरो कूपन बॉन्ड का, और हाई कूपन में हम किसी भी नॉर्मल कूपन पेइंग बॉन्ड का एग्जांपल ले लेंगे, 4 इयर्स का एक बॉन्ड ले लेते हैं। सो कूपन एंड बॉन्ड प्राइस रिलेशनशिप हम किसका देख रहे हैं, यहां हमने देखा था बॉन्ड प्राइस एंड यील्ड का, अब हम ले रहे हैं कूपन एंड बॉन्ड प्राइस, कूपन रेट एंड बॉन्ड प्राइस। हमने दो बॉन्ड ले लेने हैं, बॉन्ड ए एंड बॉन्ड बी, दोनों का टेन्योर टर्म टू मैच्योरिटी वो कांस्टेंट रखते हैं, एट अ टाइम एक वेरिएबल को चेंज करते हैं। टर्म टू मैच्योरिटी दोनों का 4 इयर्स है, दोनों की फेस वैल्यू 1000 है। बॉन्ड ए एनुअल कूपन है 10% का, जबकि ये जीरो कूपन बॉन्ड है, एनुअल फ्रीक्वेंसी। नाउ लेट्स सी कि अगर लेट्स से अभी ये बॉन्ड दोनों ही अगर हम आज प्राइस करें तो हमें आज की डिजायर्ड यील्ड चाहिएगी। सो लेट्स से द डिजायर्ड यील्ड इज लेट्स से is 10% in both the cases. So what will be the present value at this situation, जहां अभी हमने और कोई वेरिएबल चेंज नहीं किया। तो फर्स्ट केस बॉन्ड ए के केस में रिडम्पशन एट पार है एंड कूपन रेट और डिजायर्ड यील्ड दोनों इक्वल है, तो बॉन्ड प्राइस विल बी ऑल्सो इक्वल्स टू 1000। बट सेकेंड केस में हमें वैल्यूएशन करना पड़ेगा। सो सेकेंड केस का वैल्यूएशन हो जाएगा 1000 अपॉन 1.10 पावर 4, which will be equals to 683 रुपीस। सो अब हम क्या करते हैं कि देखते हैं कि जिसका कूपन हायर होता है उसकी प्राइस ज्यादा चेंज होती है, जिसका कूपन लोअर है उसकी प्राइस ज्यादा चेंज होती है फॉर अ गिवन चेंज इन वाईटीएम। बॉन्ड प्राइस तभी चेंज होगी जब वाईटीएम मार्केट में चेंज होगा, बाकी कूपन एक बार फिक्स हो गया एट द टाइम ऑफ इशू, वो कभी चेंज नहीं होगा। सो लेट्स start with increasing 100 basis point in the yield. So if new YTM, new yield required, desired yield is equals to 11%, let's analyze the new prices. Case 1, so new present value will be equals to, in this case अब हमारे को कैलकुलेट करनी पड़ेगी n equals to 4, n equals to 4, FB equals to 1000, PMT equals to 100, then we have YTM IY equals to 11%. So what is the PV? PV will be equals to, compute PV will be equals to, in this case 11 YTM 4 time 1000 is my future value, 100 is my coupon. So present value is equals to 968.98. So what is the percentage change? Percentage change in present value equals to, percentage change in present value equals to, so percentage change is new value minus old value, new value minus old value on old value divided by old value, percentage is equals to, the percentage change is negative 3.10%. So bond price decreased by 3.10% because of 1% increase in yield. Let's analyze the second part. Now again here it is future value is 1000, PMT in this case will be equals to 0. So let's find out what is the 0 is your PMT, 1000 is your future value, 11 is yield, 4 years, and the present value. Now the PV resulted, final new PV is equals to 658.73. Let's analyze the again percentage change. So new value minus old value 683 divided by 683% is equals to negative 3.55%. So my bond price, zero coupon bond for a given change in YTM, the bond which is having lower coupon is changing more than the bond having the higher coupon rate. Again, let's go for a case 2. In this case, case 2 will be new yield. Let's go for another case. New yield is equals to, IY is equals to 9%, and here also 9%. Let's analyze again, everything is same, all the factors are same. So let's compute new PV. So new PV is equals to 100,000, 4 years, 9, and PV. New PV is 1032.3 or 40. So what is the percentage change in PV? Percentage change in present value is equals to 3.24% on 1000 rupees. Second case, in same case of 0 is PMT and same, other values are same. Let's put input once again, 0, 1000, 0, 4, and 9 is YTM. So value is equals to, value will increase because the yield and the bond price are having inverse relationship. So value is increasing from 683 original value to 708.43. So let's analyze the percentage change on 683 divided by 683% is equals to positive 3.72%. It means in both the cases, the percentage change is higher. In both the cases, the percentage change is higher for zero coupon bond for a given percentage change in yield, desired yield by the investor. So lower the coupon, more will be the percentage change either of the side, and higher the coupon, less will be the percentage change in the bond price for a given percentage change. So what is the final outcome we have? That for the same time to maturity, we have kept other things constant. For the same time to maturity, for a given percentage change, yield, required yield, lower the coupon, higher will be the change, and higher the coupon, lower will be the change. Let's go for the third variable. So now we have understood the relationship between first yield and bond price, second coupon rate and bond price, third thing is N, that is the number of years, that is the term to maturity. So what is the relationship between a bond price and term to maturity, whether it is positive or negative? It means if higher is the bond term to maturity, whether bond price will change more or less, let's find out. So we will take, now here we will keep coupon rate constant, and what we are going to fix is one bond is with the higher tenure and second bond is with the lower tenure. And then we will change the YTM, and then we will find what is the impact on lower term to maturity bond and higher term to maturity bond. So let's find out. Third case. Next is bond prices and term to maturity. Let's go for another two bonds, X and Y. Now number of year is different. One is of 4 years, another is of 6 years. Coupon rate is constant, so face value is your 1000 in both the cases. Coupon rate is your also constant, 100 rupees and 100 rupees, keeping other things constant. So we have N, FV, PMT. Now I need IY, existing yield, desired yield is, let's say in both the cases it is 10%. So both the bonds are trading at par because your coupon rate and your desired yield are constant, same. So and redeeming at par, so your present value will be also equals to 1000. So this is the original situation. Now let's change the case A. Case 1. New desired yield is equals to 100 basis point higher, so it is 11%, and this is also 11%. So let's calculate the new present value. N will be same, FV will be same, PMT will be same, only change is your desired yield. So let's find out new PV. First case, 4 is your time, 11 is your IY, 100, and 1000 and 1000. So let's find out what is the present value. In this case, it is 968.98. What is the percentage change in PV? The percentage change in PV is minus 1000, new value minus old value over old value is equals to negative 3.10% change. Now again, for second part of the bond, second buy bond, N is now 6. 1000, PMT is 100, 1000 is face value, and now the desired yield is 11. So let's find out the present value. It is 957.69. So what is the change? Change is negative 4.23%. It means higher the term to maturity, keeping other things constant, your coupon rate, your face value, your same change in YTM, the higher the term to maturity, higher will be the changes in the bond price, and this we will also see in the duration. Generally, bond with a higher term to maturity will have higher duration, and duration is the measure of the risk, and it means there will be more changes, uncertainty in the long-term bonds. Let's analyze the reverse case, case 2. So now desired yield is 9% and 9%. Let's find out the present value for both the bonds. First one, 4N9 IY 100 is your PMT and 1000 is your future value. Let's calculate the PV. It is 1032.3 or 40. So we have got the percentage change of percentage change in PV. It is on 1000, so it is 3.24% positive. Second case, 6 is the end, so PV will be equals to 1044.86. So change is 4.49%. Again, higher the term to maturity, higher is the percentage change. So let's analyze what is the text saying. Text is saying that for same coupon should be same. We have to keep other variables constant, and face value of course same. Given a change in required yield, given a change in the required yield, equal change. Low time to maturity will have low change, positive relationship, and high term time to maturity will have high change. But there is an exception. One exception, very important from MCQ point of view, when a bond is of very long term period, very long term period. Number one, not a zero coupon bond, because zero coupon bond will have highest changes, and on the basis of maturity, because their duration is almost equals to tenure, and duration we will discuss in risk part. So not zero coupon bond, and this long term bond is of very low coupon rate and trading at discount. It means the desired yield is more than your coupon rate. In that case, this rule may not hold good. This is the only exception area related to term to maturity and bond price. In that case, the long-term bond price may change lower, less comparison to the short-term bond in some cases. So let's go for another topic, relationship of bond price as the bond moves towards maturity. So the term to maturity will reduce. So what will happen for a bond when it is reaching its maturity period? What will happen to its bond price, keeping other things constant? Now yield is also constant, coupon rate is already fixed, face value is fixed. The only thing is N is going down. So when N is going down, what will be the new present values? So let's analyze again two bonds. Let's go for bond P and Q. Both have a face value of 1000 and 1000. Both have a coupon rate of 10%, so 100 and 100. Let's go for one more bond, 1000, 100, Coupon rate is same. No, we have to go for a change in coupon rate. One, we need to have a bond at premium, and then one, we need to have a bond at discount. So that's why then we will be able to understand what is the effect of bond reaching its maturity, that is reduction in the term to maturity. So both have all three bonds have different PMT. Now we have number of year, it is 4, it is also 4, it is also 4. Let's analyze all three bonds together. And now we have yield YTM in first case. Yield is also constant. We have to keep yield constant, and now we are changing the term to maturity. So let's keep yield constant first. So if required yield is 10% and 10% and 10%, and if now case 1, original maturity if is 4 years, n is equals to 4, 4 and 4. Let's find out what will be the present value. Let's say it is T0, the price at T0, and nothing will change over the 4 years except the time to maturity, because as the time passes, the bonds will go nearer to its maturity. In first case, what will be the price? Let's analyze. Case T0, T1, T2 and T3 and last T4. What will happen to present value? First, n will become 3 here, n will become 2 here, n will become 1 here, and n will become, so there will be no price, it will be maturing. So it's almost equals to the present value. So let's find out the present values, or let's keep T4 as n equals to 0. So PV, PV and PV, we are now analyzing present values. PV, present value, and one more present value. Let's go for another present value. In all the three cases, now the time will change to 3. Let's analyze each bond. What will be the trajectory of its price when the time to maturity will reduce as the time passes? Let's see. First case, let's find out the original value at T0. So first bond P, let's analyze. 1000 is the face value, 120 is the PMT coupon, 10 is my required yield, and this will be constant for the entire time. Now starting bond is of tenure of 4 years. Let's find out what is the present value. The bond is trading at premium because coupon rate is more than the desired yield. Coupon rate is 12%. It's a 12% bond, it's a 10% bond, and it's a 8% bond. So this bond is trading at 1063.40 at the start when bond is issued, or at T0 we will say. Next, second case, when this 1 year passes, so bond time to maturity left is 3 years. Let's analyze the present value. So it is reducing to 1049.73. So the bond which was trading at 1063.40 is moving down. Though the coupon rate, face value, yield is also constant, still there is a decrease in price because bond is moving towards its maturity value. Why? Because at the end, finally bond has to reach at 1000, because ultimately the investor will get only 1000 at the T4. So value of that instrument will become 1000 because it is getting converted into only 1000 rupees. So this is decreasing. Let's analyze if it is 2 years. Present value reduces to 1034.71, further goes down. Let's go for 1 year, then it is 1018.18, and if it is 0, the bond price will be equals to exact 1000 rupees. 1018.18. Let's analyze for this Q bond where the yield and coupon rate was constant from start. Let's see. 100 is my PMT, 1000 is my face value, 10 is yield. Originally 4 years, so bond was running at par because coupon and yield is constant. Now, if the time passes and 1 year is over, so bond term to maturity will be left to 3 years. Again, let's calculate the present value. Again, it is at 1000. Nothing will move because it's already running at par. Let's say if it is 2, it is again 1000. 1 year left, again 1000. And last year, again it is 1000 only. 0 and again it is 1000. So what is happening is bond price is moving towards maturity, or we say it as pull to par effect on the bond yield price. This is called as bond yield price yield trajectory, that is on time the price will, even though the yield is not changing, the bond price will by itself will move towards par value, that is the redemption value, as the time passes and bond goes near to its maturity. Let's analyze the third bond also. In that case, my PMT is 80, 1000 is my future value, and 10 is the desired yield, 4 years. So bond will trade, of course, at a discount because coupon rate is less than yield. So 930, where is this? 936.60. 1 year passes, so N changes to 3. Let's analyze. Now automatically bond price is moving now up without any change with any variable, only time to maturity is going down. So 950.26, 965.29, 981, and last, ultimately when it's 0, the price will again become how much? 1000 rupees. So this means bond price will be pulled to par value as the bond reaches its maturity value, whether bond is trading at premium or at discount or it is running at par itself. So this is the scenario where the bond was running at 936.60. So this first one was our P, second is bond Q, and the last one is our bond R. And this whole phenomena is called as constant price yield trajectory, where bond will be pulled to par, and this effect is called as pull to par effect. Last relationship, so we have done bond and yield effect, bond and relationship between price and yield. Second, coupon rate and prices, impact of changes in term to maturity and price, and as the bond moves towards maturity, so as the time to maturity reduces, the bond price will also change. The last effect is called as convexity effect. Now what is convexity effect? The relationship of bond price, the dependent variable. Price is dependent on what? Required yield. If the yield changes, the price will also change. So independent variable is my required yield. Investor decide as per the risk profile of the bond that how much he desire from this bond. So for a given bond, any type of bond, if the face value is 1000, N is 4 years, PMT is again 100 because it's a 10% coupon paying bond. Let's analyze the three situations. If the desired yield is 10%, the bond price is 1000 because running at par, trading at par because coupon and desired yield are same. Now, if bond yield changes to 8%, a 2% reduction, what will happen to bond price? The bond price increases to 1066.24. So there is a change of positive 6.62%. Now let's increase the bond yield for 2%. So there was a reduction of minus 2% and there is a positive of 2%. So in this case, inverse relationship, as the yield goes down, price will move up, and as the yield increases, price will move down. But how much? Let's analyze. The price will move down to 939.25. And what is the percentage change? It is negative 6.07% or 68%. What happened? When the bond price at the required yield of 10, 8 and 12, as the yield increases from R to R2, R0 to R2, the bond price will move down, and this movement is negative 6.07%. When yield decreases from 10 to 8%, the bond price will move up from B0 to B1, and this movement is 6.62%. So from this example, we can conclude that for a equal percentage change in yield, when yield decreases, the increase in the bond price is higher than at the same increase in yield, bond price will decrease, then that decrease will be at a lower value. So bond price is decreasing, I'll say again, the bond price is decreasing at a decreasing rate, but increasing at a increasing rate. So it means it's not a linear relationship. If अगर ये लीनियर रिलेशनशिप होता तो हमारा चेंज जो होता वो इक्वल होता, बिकॉज लाइन का स्लोप कांस्टेंट रहता है. सो फॉर एवरी गिवन चेंज बोथ साइड इंक्रीज और डिक्रीज इन इंडिपेंडेंट वेरिएबल आपका परसेंटेज चेंज सेम आता. बट बॉन्ड प्राइस के केस में ऐसा नहीं है, और हमारे यहां पर डिक्रीज के केस में जब बॉन्ड प्राइस रिड्यूस हो रहा है बिकॉज राइज इन यील्ड्स, decrease is happening at a lower value. Decrease is happening at a decreasing rate, but increase will happen at a increasing rate. So this is giving us a convex relationship, that is curve which is facing towards the origin, and this relationship is called as this effect is called as convexity effect. We have mathematics formulas for valuing this convexity, how this is going to be calculated using differentiation, that we will cover in the interest rate risk calculation. So here we were having only theoretical concept that first, bond price and yields are inversely related, number one. Number two, for a given change in yield, the bond price having higher coupon versus the bond which is having a higher coupon versus a bond which is having lower coupon, the lower coupon bond will have higher fluctuation in the prices, higher uncertainty, whereas higher coupon bond will have lower fluctuation. It will also have fluctuation, but the fluctuation, the uncertainty of change in the prices will be less, so risk will be less. Regarding time to maturity, for a given coupon, and when the bond prices, when the yields will change for a given change in yield, the bond which is having a higher tenure is going to face higher changes in bond prices, और जिसका टेन्योर लोअर रहेगा उसके प्राइसेस में चेंजेस कम होंगे. एक एक्सेप्शन था, लॉन्ग टर्म, very long term low coupon and bond trading at discount may not follow this particular rule. Second, price yield trajectory as the bond goes near to its maturity, whether it is trading at premium or discount to par, it will automatically come to its par value at the end till the as the bond reaches its maturity. And last, convexity effect. It means the bond prices and yields are having a non-linear relationship. In fact, we say convex relationship. That means for decrease in yield, the bond price will move up, and this increase will be happening at an increasing rate. And when there is a increase in yield, the bond price will go down, and this decrease in bond price will be at a decreasing rate. So that is why it is going to create a convex curve. And how to measure this convexity, we will cover in the interest rate risk part. So thank you everyone. Last part, one more topic is left for this learning module, that is metrics pricing. So we will cover that in next part. Thank you so much.